Hello friends, I'm Ketan Joshi, a CA final student from Mumbai, pursuing my articleship training from Joshi and Company, a firm of chartered accountants based in Ahmedabad. In this video, I'm going to share my practical experience on how to review books of accounts for tax audit purpose. Before starting with my topic, I would like to thank CA Jigen Shah, a senior partner of our firm, who has given me this opportunity. And also want to give disclaimer that before considering any content out of these videos as a fact, kindly get advice from your respected professional consultant, as these videos are being prepared only for study and reference purpose. Further, I would like to inform that we have divided this topic into three video parts. First part of video is about importance of reviewing books of account. Second part and third part are based on the financial statement that I will let you know later on in this video in a brief. Starting, we will see in this video first part. Before that, let us see what we are going to learn through this session. You can find many videos and lectures explaining us or decoding the sections or clauses of forms under the tax audit, but there are no videos or lectures which shows us how to enter or verify the figures or values under the forms or clauses of forms under tax audit. So here what we are going to see, we'll see how to enter the figures under the forms, that is clauses of forms under tax audit. From which part of financial statement this clause is to be filled. Let's say, let's take an example, clause number 18, that is about depreciation. It is being reported from the financial statement part, asset side, from the balance sheet, because when we enter figures of fixed assets, it automatically calculate the depreciation as per income tax act. So it has to be entered from fixed assets. Like that, we will see all whole form 3CD how it is to be entered from the books of account. Further, this video will also be helpful to you if you are reviewing the work of other, because we will see from which part it is being to be entered. So from directly there we can enter or verify the figures being entered in the form 3CD. Moving ahead, starting the first part, importance of reviewing books of account. When we do any work, we always think or identify the importance of that work. Whether it is important, can I skip any part of this work, etc. question arises in our mind before doing any work. So let us see importance of reviewing books of account. First of all, we'll see from the perspective of articleship that why it is important from the perspective of articleship. Because as an article, we do review books of accounts in and out of our procedure while carrying out the audit, which may be tax audit, internal audit, statutory audit, or any other audit assignment during our articleship tenure of 2.5 years after 6 months of leave. Many audit assignments we do carry. So in and out of our audit procedure, we do review books of account with different perspective depending upon objective of audit engagement or purpose of audit. To complete each and every audit effectively and efficiently, we have to understand how to review books of account, or we do need require knowledge about how to review books of accounts. So this video is very important for you during your articleship. It will be helpful to you. And also, if you are a fresher, when we join as a fresher, we might not have a knowledge about how to review books of accounts. So this video will also be helpful to you if you are fresher. Then after watching this, at least you will have a knowledge about how to review books of account for tax audit purpose. So it is important for us to, as an article, to understand what how to review books of accounts. Further, if you see from the perspective of income tax, then under income tax, books of account is an specified demand made under Income Tax Act for the important purpose of regulating income tax. And all the government is highly concerned about tax evasion. So books of account maintaining is one of the several methods being implemented by government to track the incomes of citizen. The income tax law also makes the point to maintain books of assessors account as per section 44AA. Further, it should be audited by chartered accountant as per section 44AB. Now, what is audit? Auditing is an examination of accounting and financial record that is undertaken independently. This is done to determine the company or a business undertaking has conferred its operation as per law and generally accepted accounting principle. The audit report is prepared as a proof of audit which ensures all the accounts are verified. Under income tax, audit report is prepared in a specified format form as a form 3CA, form 3CB and form 3CD. Form 3CA is for company's assessee, form 3CB is for assessee other than company. Under Form 3CA and Form 3CB, basic information regarding auditor and auditee has been mentioned along with the qualifications, if any, made by auditor with respect to tax audit are being entered. Further, Form 3CD contains two parts, Part A and Part B. Part A is containing the basic information regarding the business. Part B consists of the financial information along with the compliance information of the business during the year. Form 3CD is an annexure to Form 3CA and Form 3CB. It consists of 44 clauses. There are 44 clauses in Form 3CD. They have asked details in that 44 clauses about the assessee or the auditee or business regarding any assessment year for the that all those are to be filled up from the financial statement for the relevant financial year or assessment year. So to fill all those clauses correctly, we need to review books of account. Let's take an example. If we take clause number let's say 18 again for depreciation, then for the purpose of depreciation we have to enter the figures of financial fixed assets that we can enter only from the books of accounts. Without reviewing books of account we cannot enter that. Further, if we see the value of closing stock, method of valuation of closing stock, then under clause number 14, then we have to again review books of account. Without reviewing that we cannot enter that also. So books of account is one of the important thing to be reviewed for any audit, and mostly for tax audit, because under tax audit many compliance observation has to be entered as per specified format, like most one of the most important is about TDS, statutory dues, etc. Further, Income tax has also specified books of accounts to be maintained as per Rule 6F, that are cash book, bank book, purchase register, sales register, journal vouchers, and ledgers. All these are part of financial statement, that is mainly a balance sheet and profit and loss account, as they are being prepared from the combination of all these books of account. Under clause number 11 and 13, this information has to be filled up, because clause number 11 says that whether books of accounts are be maintained by the assessee, yes or no, as per Rule 6F. List down, we have to under clause 11B, we need to list down all those books of account maintained along with the address where they are kept. And again, in the C clause 11C, we need to enter what we have examined as an auditor. So we need to enter this figure in clause number 11. Again, clause number 13 asks about the method of accounting. If there any change in method of accounting, if there any change, then what is effect of that, what is amount of effect going to be effect in a profit and loss of account, if any adjustment required in profit and loss account, then details of that, and declare what is a disclosure as per ICDS, if any required, then to be given in that uh, form 13. So this was the important purpose of reviewing books of account. Further, we will see that before starting any audit, what are the preliminary steps to be taken. So first part, first thing is that always start your audit after reading tax audit report of previous year, because from there you will get many observations regarding the organization either we have issued, or if any other auditor have issued, then we always have to read the that part of tax audit report every year before starting the audit. Further, understand the business. Understanding the business means what are the major sources of generating revenue for the organization, what are the major product that company is dealing with, which industry it belongs to, what type of sorry, what is the main product they are consuming for the uh, production of the goods, if they are manufacturing in it, what type of services they are giving, etc., has to be understood from the perspective of business. Further, identify the risk based on the tax audit report and business we have understood. Identify the risk, that which area the risk has been higher and which area the risk has been lower, because it will help us to do audit in a scatter in a better way. Further, then plan your audit as and perform as per the uh, risk identified by you. So from this we need to enter this under clause number 9, 11, 9, 10, along with clause part A of the business. As we understood the business, we know the name of assessee, name of the business, address of the business, permanent account number of the business. If assessee is liable to indirect tax, then name uh, indirect tax, then in clause number 4, that indirect tax identification number. Fifth number, status of the assessee. Sixth number, previous year, which previous year it belongs to. Seventh number, assessment year. Eighth number, indicate the relevant clause of section 44AB under which tax audit has been done. Means clause A, B, C, D, under which clause we have done tax audit. We need to enter that clause here. Again, for the form clause number In clause 9, we need to enter details regarding partners or members of the organization or the business. That is, how many partners if it is a partnership firm, and what is their profit sharing ratio. If it is an association of a person, then how many members are there and what is their profit sharing ratio. We need to enter that in clause number 9a. And 9b requires information regarding if there are any change in current year regarding partners or members from the previous year. We need to enter that changes in 9b. Clause number 10. Clause number 10 requires information regarding the nature of the business. If we are doing one or more than one business, we need to enter every business in clause number 10a, its nature. And 10b requires information regarding if there any change in current year in the nature of business from the previous year, has to be entered in clause number 10. That let's see example. In previous year we were doing a business of mobile, but in current year we have also started a business of FMCG. Then we need to enter the business of FMCG in clause number 10b. That's all for the part 1 of the video. Let's see what we are going to cover in part 2 of the video. Part 2, we are going to cover income side and asset side as a part of profit and loss account and the financial statement, and assets and liability side as a part of balance sheet and the financial statement. Now in both of this part, we'll see which clauses are directly related to each of these four sides, because to make easy audit, we should always bifurcate our financial statement into four parts: as income, assets, liabilities and expenses. That is, income and expenses as a part of trading profit and loss account, assets and liability as a part of balance sheet. Every financial statement consists of profit and loss and balance sheet. Each and every books of account would be consisting of each of these four parts. So doing audit one by one, we'll see one by one all these four parts. First income, then expense, then assets and liabilities in the relevant videos. We'll see in that which part of this side is required to be entered in the remaining 32 clauses. Out of 44, we have seen 12 so far. So remaining 32, which clause is related to this part. If we see, take one example, then we can take example of closing stock. Closing stock, under clause number 14, we need to enter the method of valuing closing stock. It can be entered only from asset side, because there we have to see whether assets inventory has been valued as per AS2 or not. But it also has been entered, closing stock value is being written in expense side of trading account, but we cannot take it from there. Why? Because in expense side of trading account, the figure is being entered from asset side. If we enter value in the inventory closing stock, that is only entered here. So we'll see in asset side, not in this side. Like that, we'll bifurcate all these clauses in a specified category, specified side, and we'll see that how and from where we can enter these figures. So friends, stay tuned for the second part of the video. We'll uploading soon, and thanks for watching this video. I hope you like this video. Please comment your reviews in the below comment box. Thank you, friends.